Hi, this is James Shrug with Westpac London's end of day report for Monday, September the 24th. Another down day on European equity markets today. Things started off with a negative tone following more reports of economic weakness out of China. But the bad news continued in Europe with the German IFO Business Climate Index for September falling further. This contrasts with the surveys of analysts from ZEW and Centix over the last week or two, which showed bounces following the European Central Bank's bond buying plan announcement. In contrast, the IFO survey of 7,000 businesses showed both its expectations component and its current conditions component back at the levels they were running in the first few quarters of the recession in 2008. And that's when German GDP growth was running around minus 0.4% per quarter. So to the extent that IFOs are reasonable guides of the economy, I mean that could be what's in prospect for the remainder of this year for the German economy, which in turn would mean that economic growth in Germany would no longer be offsetting weakness elsewhere in Euroland, so the broader European recession or growth numbers would imply a deeper recession than the very mild or shallow dip that we've had in the aggregate quarterly data to date. But not just that. I mean, there's been a lot of bickering going on in Europe amongst the various leaders. I mean, you may recall the term Merkozy, which referred to the apparently comfortable relationship between Chancellor Merkel and President Sarkozy of France. He's now gone. We've got Hollande now in France. We've dubbed that murky hole, that relationship, because of the rift that seems to really have emerged between the two. I mean, today they're arguing about banking union and regulation. France wants it now. The Germans want to get it right and take time to get it right. France is responding to reports that there might be a €20 billion shortfall in terms of Greece meeting its budget deficit reduction targets by saying, well, let's give them the bailout money anyway. Germany's most recent position on that is 9, although they haven't said anything today about it. Also, Germany's prepared actually to allow the embryonic ESM bailout fund to be leveraged up, such that its bond purchasing power is greater than the 500 odd billion that's going to be in the fund. But Finland are saying no to that one. Germany's suggesting that Spain doesn't take a bailout. Spain is saying it won't take a bailout if the conditions are too tough, but might if the conditions are appropriate. Italy, or the Monti government in Italy, is under pressure to take the bailout, so that, because that's a caretaker government, so that the subsequent elected government of whatever persuasion is basically straitjacketed by the agreements that Monti as caretaker would have put in place in exchange for the bailout in terms of the austerity reform conditions that would accompany it. So a lot of bickering going on, a lot of someone has to compromise, someone has to give in at some point. Mario Draghi went to a lot of effort at the ECB to pull together his bond buying plan, but he won't activate it until someone asks for help. That all hasn't helped markets today, and as I say, it's happening at a time when the German economy looks to be sliding. So there was some US data as well. The Dallas Fed Factory Index was negative for the 5th month in 6, only slightly so. It came in at minus 0.9. It's had steeper negative readings than that recently. And what was interesting is that that's a question on business conditions. So a modestly negative overall sentiment in terms of bosses, but they reported for their own firms higher orders, higher shipments, and still growing but slower growth in jobs. So firms are worried about what's going on around them, but their own businesses still seem to be expanding. The Chicago Fed's National Activity Index, which is like a coincident indicator, it was minus 0.9 in August. That's its weakest reading since the recession of 2009. So a little bit sobering there. And that's it in terms of today's data and news. In terms of the markets, we've got another half an hour or so to go in Europe. At this stage, the FTSE is down 0.25%. The French market's down 0.8%. The Germans are off 0.4%. The Italians are down 0.75%, and the Spanish market is off just over 1% today, and the Dow is down 0.2%. Apple stocks have lost a bit today. Apparently they only sold more than 5 million iPhone 5s, not the 10 million that had been bandied around in terms of sales last weekend. Commodity markets, the oil price is down 1.2% today at $91.70 a barrel. Copper price is down a similar amount, 1.2%, and gold's off 0.5% at $1,768 an ounce. The Aussie dollar is at 1.042. It's been drifting a little bit lower. We've got the Reserve Bank's Financial Stability Review. That's its 6-monthly health check of the Australian financial system, basically. Banks, household debt, etc. all gets covered, and it's always worth a read. That's it for now. I'll be back again tomorrow.